we help launch ETFs. We're the backbone behind about 65 ETFs. We also facilitate trading for ETFs that are not in our trust. And, to that point, when I look at the ETF market, it's totally all about innovation, right? So
welcome to the Rose Show podcast. Thank you so much for joining us today. Today, I'm here with the ETF professor, Dan Weiskopf. Dan, you wear many hats and you're usually the interviewer. So we have you in that seat today. And so we're so excited to learn more about Title Financial Group, your block ETF, BLOK, that you're a co-portfolio manager for. You're an ETF strategist for the ETF think tank, Innovation. How you doing today?
Doing great. Thrilled to be on this side of the interview. This is going to be a lot of fun for me.
Absolutely. Well, it'll be definitely a lot of fun. We'll have discussions and we'll see where it goes. So, you know what? I want to begin with you telling us what you do. What is your core business focus?
Well, I think ultimately it's research, whether it's researching blockchain companies or researching ETFs. I mean, they call me the ETF think tank. I'm sorry, the ETF professor, because I've been involved with ETFs for so long. It's kind of my DNA because I'm just really a very curious person.
Mm-hmm.
And the way I got into ETFs is a little bit different, I think, than a lot of folks. When I got into ETFs, there were only about 200 ETFs out there and about $200 billion. And for me, it was about the access to different investment options and strategies, not about, oh, good, guess what? I can invest for 3 bips, right? I think that's nice that people have the access that on a low cost basis. And I'm thrilled for so many people that it's democratized, different strategies for folks. But for me, when I'm looking at 3,100, 3,200 ETFs out there and $7 trillion, I'm a little bit of a kid in a candy store. So I guess the answer to your question is research, talking to financial advisors, all day long, and a lot of CEOs all day long too. So it's a very dynamic day, I would say.
Sounds exciting. I also am a curious person and I'm always learning and love sharing that knowledge that we learn. So I'm so excited to talk more about ETFs. I love ETFs. I see the world through ETFs as well. I think they're great diversification and risk management. And they're so exciting nowadays. There's so many of them. And where did you start out? I know you been in the financial markets a long time. Could you tell us a little bit about your background to where we are today?
Oh, geez. Okay, I'm going to do this in under a couple of minutes, I promise.
Okay.
So when I started, it was 1987. So that's a fair amount of time
The
that I've been
80s.
in the business. And
Mhm.
and I started working in a family office that was diversified in the context of investing in venture capital, as well as muni bonds, as well as activism in corporate America. So at 21, again, I had a lot of options, a lot of interests, and a lot of opportunities to learn, right? Because I think that's so important.
Mhm.
Then, I launched a hedge fund, and it was small cap hedge fund, small mid cap. And then I spent some time at UBS. I had an opportunity to take over somebody's book of business at UBS. Few people go from a hedge fund to a UBS type of firm. And then, candidly, the big firm wasn't right for me. I was really getting into ETFs at that time, about 20 years ago, and I wanted to build a business around the ETF industry, right? So I was an ETF strategist, and then in 2018, after about 10 years knowing the team here, I joined Tarosa, which today is known as Title Financial Group. And so that's a pretty long journey, stated in a short way, perhaps. But where we are today at Title is really, really exciting because we help launch ETFs. We're the backbone behind about 65 ETFs. We also facilitate trading for ETFs that are not in our trust. And, to that point, when I look at the ETF market, it's totally all about innovation, right? So what we like to say, at Title is if you have a great idea, bring it to us. Maybe we can help you launch the ETF so long as you can get scale. That's something that a lot of folks don't always appreciate about ETFs. And you can launch an ETF and get $500,000 together and launch an ETF. It's just not going to go anywhere. That's the problem. You need to have a real strategy to market it and to help foster it in general, because it does cost some money to operate.
Absolutely. Wow. Well, your diverse background definitely adds to the ETFs because ETFs are in their nature diversification. So, wow, I'd love, we want to start talking about ETFs and what you're seeing with current trends. Absolutely. Innovation is at the heart of everything. The market has been changing. AI, machine learning, the Internet of Things. I mean, blockchain is just much needed technology. You talk about ETFs and strategy and scaling and having been in businesses over 25 years, I understand the importance of that. And, it's interesting, ETFs are bought. Unlike we always think of products that are sold, right? ETFs are something you have to market for buying. So it's a little bit of a different dynamic. And so it involves special type of strategy. So I'd like to know more about your I think it's called your white label at Title. If you could tell us about that and a little bit about the process that you guys do for the launching of ETFs.
Well, soup to nuts. Somebody may come to us with an idea. Maybe even a financial advisor comes to us with an idea. Hypothetically, they've been running an SMA strategy and they want to do the right thing for their client. What's the right thing? The right thing is to take, as an example, that SMA, put it in an ETF, right? That client base then, has their strategy wrapped fully transparent and tax efficient. I mean, think about how powerful that is, right? And that financial advisor also has a branding opportunity as well, because hey, anybody can buy that ETF and it trades, and every time it trades, it highlights somebody's brand. So people come to us and they can launch that ETF in our trust. Like BlackRock has a trust. And that's just a wrapper, and they launch it in our trust. We give them all the legal work, that documentation. We can help them market and distribute the product. When that product needs to be traded, we have a trading desk. And all this is, in my mind, kind of like Intel Inside. That's us. And they're the brand, because it shouldn't be us, right? It should be somebody else who's the interface. And you said something really important about ETFs. And I'm in your camp. I think ETFs are bought, not sold. Others would disagree, which is very funny to me. But I think some of that depends on who your client base is, right?
Mm-hmm.
In that, a financial advisor doesn't want to be sold to. So in the ETF think tank, we offer the financial advisor tools that help them build their models. And by the way, I'm a tool too, right? So that financial advisor says, here, look at my model, see what your thoughts are. Where am I weak? Where am I strong? We have our own tools. We have ETF Action. We have Bloomberg. We have Morningstar. We have a lot of different tools that we can run a model through. And, well, I don't want to sound immodest, experience counts too, right?
Absolutely.
And at the end of the day, and I think you'd appreciate this, we all have to work more efficiently.
Mm-hmm.
And I'm happy to, hear your views on this. But if I'm constantly looking through the ETF marketplace, I can probably save you some time in the selection process. If you have a random client who wants an idea around robotics as an example, I've already filtered through that space, or I know how to do it really quickly using our tools.
I agree, absolutely. We are living in an age of information overload. And so there's just I could find out, so I could spend days just researching just one topic, and it's like a rabbit hole. So what we have to do is be able to distinguish and decipher noise from signal. And at some point, all the information becomes noise unless we know how to sort. And so to me, it's very important to utilize the services of an expert or someone who's vastly experienced in particular markets. And for example, like robotics, you mentioned that topic in sectors. I'm familiar with robotics, probably more than the average person, but definitely not to the point of someone like you or someone in that field. So I prefer, for efficiency, to defer to someone who has a specialization in that field. So being an entrepreneur for so many years and having we believe in the democratization of leadership in our team. We have teams. So I turn to my team members, and I call them all team members. They're part of my organization's team. And I ask them to make their own decisions based on their information. And that saves us all time. I don't need to micromanage people. At the same time, with investments and business opportunities, I prefer to defer to someone with expertise in these subject matter, because there's just too much information out there and we have bandwidth constraint.
Well, you're spot on. And in the case of ETFs, you want to let me share my screen for
Absolutely,
a
please
second?
do.
Yeah.
We want to go into the ETF professor's brain. We want to know what's in your mind. We want to know all about these ETFs, because I love ETFs. I think they're great.
Okay, well, you let me show you the website, and we'll have some fun here.
Cool.
Let's see. Okay.
There's an
You can
ETF
see
for
it.
everything nowadays, it seems. Cool.
Pretty much, yeah. So every week we're putting out research from our team. We're, in the ETF think tank, we're also every Thursday we're hosting a happy hour at 5. We're actually, I don't know if you're familiar with the firm Strategist. We've got Dan Clifton coming on this Thursday, who's going to be talking about policy. And if you think about the importance of government policy to the small company, I mean, it'll change your life, right?
Absolutely.
If bad policy will, at least. So if you're a member of the tank, and we'll make you a member.
I'm honored. I appreciate it.
So this is the access you have, right, to the tools. And you and I were just talking about robotics. So let's see. I'm gonna keep it relatively simple. 2 ETFs that I often refer to are one's ROBO, ROBO, and the other is bots. Okay. So how do you compare 2 ETFs? Well, this is a very simple way to compare them, and what's in them, right?
Yeah,
so
exactly.
Here's the geography, and I find this so fascinating when I look at 2 ETFs.
This is so cool.
They're supposed to be doing what? Well, the same thing, giving you access to the theme, right? But wait, look, one's got 20% exposure to Japan. The other one has 31. That's a major difference, right? One is very diversified. One has concentration. Robo is a more diversified ETF, right? They have different sector exposures. Okay. I'll just pause, but this is majorly different, right? Market cap is different, and you would expect that. The overlap, shockingly, is 26%.
Venn diagram, love that.
That blows me away every time I see that. Wait, I'm choosing between these 2 ETFs, and they're supposed to be both robotics. You would expect them to be very similar, right? Okay, well, here's how different they really are. And this is much more diversified.
Mm-hmm.
And this is making one bet.
NVIDIA.
If you bet wrong on NVIDIA, you're going to have headwinds. If you bet right on NVIDIA, you make a ton of money. People have made a ton of money on NVIDIA, and let's be honest, it's been a huge trade. Now, Robo rebalances 4 times a year. Bots once a year.
Mm-hmm.
So you catch that rebalance wrong again, ouch, right?
Mm-hmm.
Here's the fundamental comparison, and then some other data. That's and if you're a financial advisor, sometimes people like hard copies, so you
Mm-hmm.
can print out the hard copy or download it to your computer and write notes on it as to why you made the decision. I know you can't read that, but you get my point. Now, here's another way to look at things, which I think is using the same comparison. So
Mm-hmm.
Robo versus bots. Now,
Mm-hmm.
you might like bots. I'm not saying bots is a bad solution, right? And I look at ETFs as solutions. But it's a quick comparison around concentration. Okay, so top 10 represents 63% in bots. Robo, almost the opposite, right? I mean, so I don't know if you're familiar with this Herfindahl's index,
Mm-hmm.
but this isn't our view on how to measure concentration. It's a statistical view. So to me, somebody who's focused on research, this is super cool.
Very cool.
You know,
Professor, I love this.
So I'll do another quick thing. So here's a portfolio that I built, gosh, I think almost 4 years ago. Oh yeah, 2019. I don't rebalance this portfolio. This is just for purposes of explaining to people how
Mm-hmm.
you can build a portfolio in the ETF think tank, and how um, you can rebound, how you can look through the tools. So anyway, AO, A, there's the strategy, right, that we built, which was designed as a aggressive strategy. The way
Mm-hmm.
I look at it should be compared to the iShares aggressive
Mm-hmm.
strategy. Now, risk strategies that are established by big firms work. Don't get me wrong. That's not the
Mm-hmm.
way I operate, but it's a good and a fair metrics. Okay. So again, portfolio construction, it is different because I haven't rebalanced.
Mm-hmm.
The sectors are different, and the overlap is not so, again, different. But this is what I really wanted to show you by highlighting this. Okay. You're probably familiar with some of these stats, right?
Mm-hmm.
Sharp ratio, beta, free cash flow, et cetera, upside, downside,
Mm-hmm.
yield. This is just kind of a cool tool.
Very cool. Free cash
Um,
flow yield. I see that. Nice.
yeah. So I don't know if you're familiar with AOA, but it's a very established product that iShares,
Mm.
BlackRock, uses. So um, these are our tools.
Very cool. Fun.
Yeah.
Lucky you. You get to
Well,
play around with this.
yeah, no, lucky me, exactly. So
What type of expense ratios are we talking about with these ETFs?
um,
We can look at all that, right? It's
oh
everything's right
yeah,
there.
no, totally. So let's see. So expense ratio right here.
Right. See
By the
that?
way, this is a funky one. BTAL. BTAL's an ETF that is short high beta
Mm-hmm.
and long low beta. So it's kind of a hedge fund type of product the fee, this isn't accurately displayed in that
Mhm.
there's a short component here. So the SEC requires you to have expenses disclosed in a different way because
Mhm.
there's a short component there. But that answers the question. And we use BTAL to lower our risk in our portfolios.
Mm, very
Right.
nice. That's the key.
Yeah. Yeah, that is the key. Okay.
Nice basket. I like it.
Do
Very
you have
cool.
any favorite ETFs?
Oh, why don't you want me to name one for just comparison? Let's do a
Let's have
very
fun.
popular one for fun. ARKK. Let's
Ooh.
go with that one.
Okay.
It's a very well-known
A
one,
very well-known one,
and
of
it's
course.
innovation, and I much respect to Kathy Wood.
I too respect Kathy Wood. She's got more guts than a lot of folks I know as an investor. But she's, the great, listen, let's be honest about Kathy. She's got tremendous conviction about what she's doing, and you have to admire that. But this is an ETF not for the faint of heart, right?
Mm-hmm.
Um,
Thematic investing is fascinating. I love those. That similar strategy. But yes, I agree with you. Very
it is.
volatile in the short
Yeah.
term.
Yeah. So here this highlights the fee because you were asking about that.
Mm-hmm.
No surprise here. Where is there overlap? Right? It's in her other funds.
Mm-hmm.
BYOB happens to be a fund that we're involved with. You were asking about our business. We also work with SoFi. We're the back end for
Mm-hmm.
SoFi.
Oh, cool.
So this is just, coincidental.
Love that. Web3. Nice.
Listen, block. We'll do block. Okay. 44% overlap. Now this is a great tool for many, many reasons, right? One, I can immediately see what other ETFs are out there that are expected to do something similar, right? Okay. Another way to use this would be, let's see, well, we'll keep it simple. A SPY. I want to do a tax swap, right?
Mm-hmm.
Immediately, I know what is similar. I know what the fees are, and I can do the tax swap,
Very cool.
right? It's just easier. Um, let's see, distillate. Distillate. We're big believers in active management. To your point,
Mm-hmm.
I don't want to make this a commercial about the ETF think tank, but I just get talking about my passion
It's
sometimes. So,
fascinating. It's great information for everyone to know and to learn about.
yeah.
Fascinating stuff. I wanted to ask you, there's a rise in ETFs. Would you say it could possibly be oversaturated, or do you think that there's still lots of room to go?
Well, there are two answers to that question, of course, right? One answer is anybody launching something that is not providing high active share, that's
Mm-hmm.
not clearly differentiated,
Mm-hmm.
and is just doing it off of price isn't going to make it. So in that regard, things are crowded, I would say. But having said that, you're going to have a fair number of mutual funds who just want to do the right thing and access the ETF market and convert some of their mutual funds, right?
Mm-hmm.
So they can compete on price and compete on where the flows are, and offer better tax efficiency.
That's always key.
Always key, right?
Taxes.
Um,
It's always about what you keep.
it's always about what you keep. Oh goodness gracious, yeah. To that point, when I think about the alternative space and ETFs, we're just getting going,
Mm.
right? If I can offer a hedge fund type of solution wrapped in an ETF, oh my goodness, wait, transparency, lower cost, tax efficiency versus, you know, opaque, gated, and expensive.
Yes, opaqueness is key. Exactly. Absolutely.
Yeah,
Well said.
we're just getting going. No, I think the ETF marketplace. I'm in the camp of 30 trillion here in the U.S. I don't know if it'll be 2030, but we're we got a lot of room to go.
No, exciting times. So let's talk themes and trends and what you're seeing from your point of view at the heart of ETFs. What structural changes are you noticing, and which ETFs are in the pipeline? What type of sectors and themes?
Well, I do have a bias towards blockchain, of course, when
Of
you ask that
course.
question.
I love blockchain.
um, I think that a lot of folks are, in fact, looking at alternatives. It's less sexy, right? Um, you mentioned chat. You know, we are involved just from a disclosure standpoint. You know, in that ETF. I think AI is fascinating on a lot of
Mhm.
levels, similar to blockchain, right? Um, and I think higher yielding ETFs
Mhm.
are interesting, and there are different ways to get that higher yield,
Ooh.
right?
Yeah.
Um, you know, there are some ETFs that are trading volatility and earning a yield on that, right? As a result.
Mhm. Yes, there are many products like that. And I find those fascinating, trading volatility.
And they're fascinating, but you know, let's put something into context, right? You've got to understand what volatility is, when it goes
Mhm.
up. You have to be sizing things properly, right?
Mhm.
Um, and you have to be willing to sell, right?
Absolutely.
When I guess when I was at UBS, I don't think there's a secret anymore, but we were not involved in the leverage products when I was at UBS, and my manager came to me and said, you know, just so you know, we're shutting all those down. And I looked at him and I said, okay, that's fine. You know, I have no problem with that, because figured you'd be upset. And I said, why would I be upset? I know those products have issues, right? And this is back in 2009, right?
Mm.
Um, and we went back to the branch manager and we said, listen, um, I think that we should run an educational program around them. And I can get direction. I can get, you know, pro shares together. I can get Ridex, it's a firm that's not around anymore, to educate the clients and educate the financial advisors. And the branch manager said, no, we don't want to, be a part of that. So we did it offsite, and we had about 50 people um, attend downtown in New York. And
Mm.
I was proud to do that. I think sometimes you have to do the right thing, even though it's difficult to do, right? And by the way, you can do that as an entrepreneur, but you can't always do that when you're at a big firm.
Mhm.
You know, so and back then the other really quirky detail is you buy these leverage products. Everybody tells you to read the prospectus, right? But you wouldn't get the
Yeah.
prospectus for like 2 weeks. I mean, how ridiculous is that? You know. So anyway, it was an interesting event, good experience for a lot of folks, and I think we helped some people out.
That's the key. Great experiences and helping others, enlightening people and learning. And it's like about lifelong learning. And I feel that we're undergoing several revolutions right now. It's like the AI, Internet of Things,
Sure.
blockchain, and it's just amazing. I feel like I'm learning at a faster pace, more and more every day. And I feel like I don't know anything. I feel like the more, like Socrates says, the more I learn, the more I know nothing. And it's just it's fascinating, it's amazing. And I guess we're both like-minded like that. We're students of life.
Yeah.
And this it's very exciting times, and I'm all about alternatives. I always talk about alternative investment solutions. Challenges bring forth opportunities and necessitate solutions. We just got to find them, and there are solutions. We just got to think different. And I always say, think different with Rosanna, because I always encourage people to think. Lately, there's so much groupthink, echo chambers, and people just aren't thinking. And maybe it's the AI, you're asking AI about everything and you're having it compose things. I don't know, but it's so important that we maintain our independent thinking. Like, to your point, when you're in big organizations, it's difficult to stand independent and have your own thinking and do what you may feel is right. Although it's important to always do what's right. But back to alternatives, I think that the time is now for alternatives, alternative investment solutions across all asset classes. And I love all these ETF products that are, you said trading volatility, but also inflation protected. And, there's just so many ETFs. It's just amazing. And I think most people don't even know. They're unaware. You could minimize risk, maximize your returns, and you don't have to watch it every day. And you're not so invested in one area, like you said, in the video, or, and there's also diversification across many markets and across the world and across emerging markets. And, they're talking about India being the next big growth story. Are you looking at any ETFs in particular with India or any of the other emerging markets that you're excited about?
It's funny you asked that question. Let's see. India, INCO. Let's see. Wait. Let's see. Let me just see. Which one is it? I thought it was. That's interesting. Huh. There we go. Okay. So my fingers were spazzing. I am interested in India, and interested in India for a couple of reasons. One, Inco's the consumer one, right? I think when you have a population the size of India, right, that is getting the benefit of technology and better financial services, you're going to see a massive expansion of benefits to the consumer, right? So INCO is one that we're looking at. And the interesting part here is you'll see that there is not a lot of overlap between all those ETFs that are out there, right? So again, I would say your experience, I'm looking for that's interesting. I'm looking for another one that has no overlap to this because it's in the technology side of India and those companies. So the consumer would be that way. So I guess the answer to your question is we are looking very closely at India, and actually we're looking at India for block too, because we see the blockchain revolution, having a huge foundational impact in a country like India, right? And I know that they're working on things related to the identification of people and having everybody using their fingerprint on the blockchain. And if you think about that, we look out years from now on how the blockchain could impact people's lives, right? You take all that you do on Facebook or Instagram or whatever, right? They are in fact getting the benefit of your efforts, right? People want to have control over their identity. It's like a perfect opportunity,
absolutely,
for things to go on the blockchain, because your identity should be immutable, right? And safe, right? We're going to see massive change in that area. And I know I'm kind of going on a tangent, but when I look at the blockchain and some of the things that are happening, whether it's HELOCs now getting done on the blockchain or supply chain getting tracked on the blockchain, by Walmart, as an example. Or, one of my best examples lately is how the blockchain might change farming.
I love ag grain, a grain chain.
Grain chain, yeah, grain chain. I'm super excited
Ag tech is
about them.
amazing.
Yeah, yeah. Now, it may not impact, as an example, and for your audience, Grain Chain's a private company, not a public company. It's not in our
Mhm,
portfolio directly. It's in our portfolio through a holding
mhm.
in Overstock. Overstock has a portfolio of companies held under the
Oh,
brand Medici. People don't realize
yes.
that, right?
Medici,
Yeah.
yes.
And anyway, fast forward. Um, it's not a big company, Grain Chain, but it's going to be a big company because it's changing how financing is getting done in Latin America or Central America, rather, right? And what does that mean? That means that the farmer needs better ways to finance their business. And
Mm-hmm.
the way that gets done is through controls around the process from seed to selling, right? I would be more inclined to loan a farmer money if I know where all my money's going, right? And if they can't mess with it, right? And that's what's happening through Grain Chain. So if I, as an example, I'm a big institution, um, can loan a farmer money in Central America, and I give them that $1 million round number, and I see 700,000 goes to seed, 300,000 goes to equipment, and then it's planted, and I see the process evolving on a regular basis, and then it's grown, right? And then I can take that crop and I see that it's loaded on, at where it gets sold properly, and it's sold, and then you move out farther and I can see that it's organic and that yield is high and all the information that you
Love
get,
it.
the fertilizer, et cetera, right? I'm going to be more inclined to loan that farmer money at a lower cost. So as an example specifically, we're talking about costs going from like 20 to 40% apparently from the company down to like 9 to the teens. I mean, think
Mm-hmm.
about how that would impact that farmer
Oh,
in
much
that
needed.
opportunity set. Yeah, no.
Absolutely.
And what is that, why would that institution be confident? Immutable,
Mm-hmm.
right? The data can't be messed with. That's really important, right? And it's constantly being validated through the blockchain.
Mm-hmm.
And as change occurs, that information is on a daily basis
Updated.
being sent to me.
Mhm.
Yeah. So I think it's really fascinating and fun.
I love it. You're not going off on any tangents because this is exactly what I love talking about. Having met with Michael Saylor, we both have met
Yep.
with him before. Amazing. It opens your mind to so much, so brilliant, the philosophy and the transformation in our society. I mean, I've been talking for a long time whenever I speak about business and I talk about dilution of value, and margins are compressed in many ways. We not only have higher fees, they're new fees. And even in the labor market, like we talked about before we started recording, we're just seeing a rise in new fees, and there's just a lot of turnover expenses in the labor, and there's a mismatch between the employer and the employee. Now I'm going off on a tangent,
Yes, okay.
but back to Grain Chain. We need to reduce costs, and that's the point of what I'm making here, is that margins are compressed, and for the farmer and in agriculture, they're reducing that intermediary, and
Yep.
by eliminating that party, we're able to pass those savings on and lower those costs. And that's so important. And you have that trust, like you mentioned, security, the immutable nature, it's incorruptible. And you can trust it. There's security, there's privacy, it's transparent. And that's so key. And that helps reduce costs, and it creates much needed efficiency. And so I love it. I'm so excited about blockchain. I think it's the future. I think that's the way we're going to be keeping records. And I always talk about how humanity advances when we're able to keep accurate records and
Yep.
objective records. And it's so important, the objectivity in decision making, because as humans, we have biases, heuristics, and that affects our decision making. I mean, the importance of that is, we want the goal ultimately as decision-making architects is to improve the accuracy of our judgments to maximize the expected value of our choices. And I believe that the blockchain does that. It helps us to have more objectivity in our decision making and reduces the counterparty risks associated with all these transactions and all of these different sectors, whether it's with the finances, the grain chain, agriculture, fintech, and it's much needed. So your block ETF is very exciting. I love how you sought out block companies in the blockchain space. Really cool stuff. There's so many things I want to talk about with you. Structure matters. I mean, I love that concept. But before we get to that, I like to hop into your restaurant finance monitor index. And I found it was fascinating that you look at the economy as an investor through the lens of a restaurant operator. Are you a restaurant operator? How do you look through that lens? And tell us what the RFM index is, please.
Well, okay. Confession. The index is no more.
Okay.
We learn from, I hate to say it, our mistakes.
Absolutely. They're educational experiences.
And having said that, I still look through the lens of the restaurant industry because it's such an important industry that I think often is misunderstood. But regardless of whether that's true or not, what does the restaurant industry as a metrics tell us?
Yes,
right?
what does
Okay. It's an easy way to measure inflation, whether it's employment or food, right? Or real estate, right? It's I think everybody should work in a restaurant at some point in their life so they can really learn about how hard it is, right? The challenge. It's also about automation, right? To your point, trying to keep control of your costs. It's about payments. There's so much that people can learn in the context of the restaurant industry that it became a focus. So to answer your question, back in 2016, I launched the index, and then on election day, I launched the ETF under the symbol menu. Now, it closed about a year after the launch, not because of bad performance, ironically, and people don't realize that about ETFs. Performance can be great, but you've got to make people aware of the ETFs and why do they need to own them. The performance was great because, well, the focus was asset light and mostly franchise companies. People think about the restaurant industry as being really, really difficult and bad businesses because it's the local bar, right? It's the local restaurant. But that's not really true, not broadly speaking. Those are tough businesses. I get that. But the asset light model is a wonderful business in the context of franchising. And where did that take me? To your point, it is one of those things that drives me in the way the ETF think tank operates. In that great ideas shouldn't die on the vine. So I get passionate about some of our great ideas. There's two of them that I think are just wonderful as metrics and potentially as investments as well, that track how Congress votes with their dollars, meaning they're two different portfolios. One is the Republicans, okay, Cruz, KRUZ, and the other one is Nance, the Democrats. And they're very different portfolios. One would expect them to be different portfolios, right? Now, when was the last time you actually knew how your Congress, whether you're Republican or Democrat, were investing, right? You probably never thought about either why you would care or how you'd figure it out. These two ETFs as ETF wrappers that are fully transparent show you
Cool.
exactly how, and maybe it's not a surprise, but Nance is more growth oriented, the Microsofts of the world, right? And Cruz is more energy, more value driven.
Not a surprise. I was going to say that. Is it more oil or energy driven?
Yeah, yeah. And culturally, maybe somebody likes how they invest,
Hmm.
and so that now they can invest aligned with their principles, whether Democrat or Republican. I think it's kind of cool.
Very cool. And I love that. What you just said was so important. You're a true entrepreneur and you think like one and you act like one. And, these are all steps in the process. And that's how I look at things. There's many things that haven't worked out, but that's not how this is all part of bringing us to where we are today and our experiences. And that's what makes this next product even better because I was able to go through
Yeah.
and learn from all that. So I find that fascinating that you use restaurant perspective to gauge inflation. I think that's key, and I think that's so smart. And that's why I wanted to mention that. But awesome, awesome stuff. And structure matters, right? I think it does. Experience matters, and I always tweet fundamentals matter because I'm a fundamentalist at heart. Structure is key. I mean, I utilize a holistic interdisciplinary approach with investing in businesses. So I always look at the base foundation. Sometimes we call it principle centered. We go to the structure, the basics. And, it's about looking at the process. And I love that you mentioned franchises and restaurants. And, it's about scalability and repeatability. And right. And that's at the heart. And we were consultants. I was a business consultant for franchise, actually a large franchise.
Hmm.
And this is many years ago. And I traveled with my husband. He's great. He's an attorney, and we were both consultants. But that is key. And I learned that back in my 20s about scalability and repeatability. So you have to always go to the heart of the matter, the structure. So I want you to talk about structure because you wrote a great article on it, and I read it, and I love the philosophy around the lifestyle of the structure. So please talk structure.
Yeah, so it's interesting. When I came up with the tagline, I was thinking basically security matters, right? And that structure matters, different wrappers, right? ETN versus ETF. And then I started thinking a little bit more, and maybe I was thinking about my daughter, 5 years ago, as an example. She's now living in Charlotte, North Carolina.
Yeah.
Should she live in New York City because, well, that's where she grew up, or should she open the world and live someplace else? And to me, does somebody want to live in the suburbs? Do they want to live in a city? Right? That's an example of structure matters.
Mm.
And it allows me to break things down very easily.
Mhm.
There's a lot of chatter now around the possibility of a spot Bitcoin ETF. Well, I'm not going to go there on whether BlackRock is successful, but if you go through all the filings, what you're going to
Mhm.
find is that there's so many different structures,
Mhm.
security structure. So in my mind, it's also, do you want an LLC or a corporate structure, right? And that's not the BlackRock comment. That's just about how, if you're going to do a business, to your
Mhm.
point, do you want a corporate structure or LLC or a partnership, kind of structure, and how do you make your partners good partners? Which is, I can't begin to imagine some of the stories that you would share on partners who've been good and partners who have not been good, and we've all had them.
Absolutely.
That
You know
is,
what to avoid after you have the bad ones.
yeah. I mean, one of the beautiful things about Tidal is we are really big into collaborations, right?
Yeah.
Which at some level means that we're sharing the risk and the responsibilities and aligning where we see ourselves having strengths and where somebody else might bring strengths to us, right? And that's about structure matters. as well, right? But you have to give up some control if you're going to be doing something
Absolutely.
like that.
Hmm.
And not everybody can do that, right? And you can try and build a framework in the legal structure. And some people have a husband who can probably help them do that, right? But
Yeah.
operationally, you're always going to have challenges,
Hmm.
right? And so I could go off on structure, but listen, not to go heavy on you, but structure matters with religion. Your religious structure,
Absolutely.
it affects your principles. So it helps me frame my thinking is a long-winded answer. And apparently I know enough people now on social media where people walk up to me and they say, "Oh yeah, you're the guy who says structure matters. I get it now. I
That's
get it now."
awesome. That's so awesome. I love that. Absolutely. We have to be able to relinquish some kind of, I guess the word control or some, unless we want to be solopreneurs. And I think for scalability, I think you do need to give up some and be trusting of others in order to grow. I notice with our businesses, I've probably started, maybe 10. I don't even keep track anymore. I've acquired businesses.
Yeah,
And I always have that challenge that, I like to do things myself. I even design my own websites because I'm like, oh, I like it done a certain way. But at some point, I need to apply that efficiency mindset and be able to delegate. Sometimes good enough is good enough.
that's
And
right.
so, you have to, there's some trade-offs. So time is the most precious asset. And that's something you cannot get back no matter what. So at that point, when I start thinking of time, I think, this is good enough. But structure matters. And I love that you brought up religion. With everything, with business and investing, you simplify, you go down to the core.
Mhm.
And if you utilize that method, it's the same in all these different arenas. You go with the same strategy, the same process, and that's how you find the solutions to the problems and challenges that we have.
Sometimes it's the things you pass up that may bother you the most, right?
Yeah,
With
absolutely.
investing,
Your
right?
greatest regrets come from the things you don't do.
Sometimes they end up being the smartest things too, right?
Yeah, of course. Yeah.
One of the deals that we passed up when I was at the family office was a company called Dell Computing back in '89. And the reason why I bring that up is, what was he doing, right? He was selling computers, you know, online.
Mhm.
How early was that, right? Well, wait, something that every entrepreneur has to acknowledge is the reality they have to pivot,
Mhm.
right? That's a skill that you can't teach an entrepreneur. They either have it or they don't, right?
Mhm.
And you
Excellent
know,
point. Yeah, absolutely. You got to know when to fold them and when to walk away and when to adapt, change to the changing times. And
yeah,
you got to be able to be flexible, open-minded as new information comes in and make changes and change your mind. Be okay to change your mind
yep,
and don't get stuck in a confirmation bias and keep fulfilling that, narrative that you have. And you have to adapt and, you have to say you're wrong. Sometimes you're wrong, and admit it
you're
and move
wrong.
on, right?
I tend to be stubborn. My mistake. This has been great. We're gonna have to have you on our show as well. Our happy hour would be a lot of fun.
Oh, I love it.
Um, and let's keep the dialogue going. By the way, I think this is also an example of the power of social media in
Mhm.
in the way LinkedIn works. I mean, I think that's how we met.
Exactly. I think so.
It,
I'm really liking LinkedIn. I just joined not too recently. And yes, your posts are fantastic. And I love what you share on there. And I've met some great people and include, especially you. I
Well,
love
thank
this.
you. And I met you too. And
Mhm.
it's LinkedIn, I think, is random in a lot of ways, right? But you got to keep pushing forward and just meeting more people.
I think I'd like to end with is what are your plans for the future and your future thoughts? And tell everyone how they can stay in touch with you and view all these great products. Give us your website and your link, your social media handles and stuff.
Of course. So Twitter, ETF Professor. That's pretty easy. Daniel Weiskopf at the ETF Think Tank. You can just Google that. You'll find me pretty easy on LinkedIn. ETF Think Tank on YouTube, as well as on the website. Definitely check it out, everybody and anybody. And feel free to reach out to me on LinkedIn, and we'll keep the dialogue going. Whoever, the funny thing is, I think particularly with blockchain, I never know where the best new idea is going to come, right? So being open to having other people reach out, I think is so important. So I'm glad you asked that question, so that's it.
That's awesome. I agree completely. And that's how we learn. And I'm always changing and growing every day as I read new information and we all share. And I think that by all coming together and collaborating, we can elevate humanity. And that's the key, just to keep advancing forward and improving ourselves, getting healthier, happier, and wealthier.
All of those. Absolutely. Have a good day.
You
Absolutely.
too. Thank you so much.
See you later.
Thank you for listening to the Rose Show podcast. Please visit rosannaprestia.com for more episodes. See you soon. All investment, real estate, financial, legal, and tax opinions expressed by Rosanna Prestia or on the Rose Show should not be relied upon as professional advice and are intended to be used for informational purposes only.